Today I want to announce a potential 10-bagger with minimal downside risk. This is a stock that combines solar panels and metals. Now both are hot in their own ways, although solar panels have definitely cooled off, but that's no worries. The stock I want to introduce today is Comstock, with the ticker being LODE. Essentially, this was a very, very risky stock that was very far from success. But times past were not that far, and the stock is less risky now that they've done a series of raises and completely cleaned up their balance sheet and their share structure. This company has a metal segment and some sort of fuel segment. This metal segment is the main thing I'm interested in, but the fuel segment, which is called Biolum, it's essentially, it was a cash burner, and they've separated it, so it's nothing to worry about, and it can be viewed kind of as a call option in a sense. They can be part of their success as well. Ignoring that, because I don't really think it's that important, the company is valued at about 120 million, and they're planning to monetize some of their real estate as well as non-strategic investments, namely their mining, I believe, for about 50 million. So that is money that I believe the market did not price it in to unlock. If they do unlock it, which they probably will, that'll really de-risk this even more, and it'll even be, in some ways, just unlocking value for shareholders. So the risk, the cash burners are gone. I don't think they'll need to do any sort of raises. And, dilution is an enemy of a lot of people, including myself. So that's always good news. The timing of this is really tough because this company's effectively pre-revenue. But as per their latest update, they used some of that cash, bought what they needed. And really, we're looking at their facility doing good work in the first half of 2026. So I guess the question might be, why would you go long now rather than closer to 2026? And I couldn't really give you a good answer here because while the market in some ways is forward-looking, Drunken Miller says he likes to be 18 months ahead of the market. A lot of times it's true the market's only looking to the next quarter. They're looking at instant news, and sometimes they're backward-looking. But why I want to be long here is because partially I think the market's kind of frothy, which eliminates good ideas. But partially I think with all the assets they have, with the cleaned up balance sheet and share structure, I think now that there's less risk on the table, investors will slowly lay their eyes on this and they'll actually be willing to buy, where before they might have said oh, I don't like that they have an ugly balance sheet, I don't like that they have notes outstanding, and they might have not bought. So I wish I could explain this one a little bit better here, but I think to dumb it down and to really get to the same level of understanding as me, all you really need to know is that their huge cash burner has been separated. They will be able to produce revenue and likely profit in less than 12 months. And they trade decently close to book value. Not that that's necessarily a good measure since they're losing money. But I think combining all these factors and knowing this is a pretty hot sector, you're set up pretty well. And the risk isn't that much as you would think it would be for a pre-revenue company. And speaking onto that as well, because it's pre-revenue, a lot of times these pre-revenue companies, you can see nice hype runs and there's no real expectations. So that's always kind of nice to add to that. But yeah, that's all for today.